You're not losing money because the market is difficult. You're losing money because your ego is in the way. Here's the solution that actually works. The moment you stop trying to be right, you start giving yourself a chance to be profitable. Until then, Forex will keep charging you tuition. You felt this before. You analyze the chart, mark your levels, wait for confirmation, and enter the trade. At first, everything looks fine. Then, price hesitates. Maybe it moves slightly against you. And instead of asking, "Is my idea still valid?" you ask a different question. Am I really wrong? That question has nothing to do with trading. That question is ego talking. Your ego ties your self-worth to being right. When a trade goes against you, it doesn't feel like market information, it feels like a personal challenge. You don't want to exit because exiting feels like admitting failure. So you hold, you widen the stop, you tell yourself the market doesn't understand what you see. And that's how the market starts taking money from you slowly, consistently, and without mercy. You might think ego only shows up as arrogance, but most of the time it shows up as attachment. You become attached to your analysis, attached to your bias, attached to the idea that you called it. The more attached you are, the harder it becomes to respond objectively when price invalidates your idea. You've probably done this exact thing. You take a loss, and instead of stepping back, you jump right back in, not because the setup is there, but because you want to prove something. You want to prove you were right the first time. That's revenge trading, and it's ego-driven. The market doesn't care about your need for validation. It only responds to price. If this already feels uncomfortably accurate, pause for a second. Like the video, subscribe to the channel, and share this with someone who keeps fighting the market instead of listening to it. Awareness is the first crack in ego's armor. Ego also shows up after wins. This part hurts because it feels good. You catch a clean trade, then another. Confidence builds, and suddenly you stop following your rules as tightly. You size up, you take marginal setups, you skip confirmations because you're in sync. That's not skill improving, that's ego expanding. And the market loves expanded ego because it leads to careless risk. You start thinking you understand the market instead of participating in it. You stop respecting uncertainty. You forget that every trade, no matter how good it looks, is just a probability. When ego takes over, you treat probability like certainty, and certainty is dangerous in Forex. Here's the hard truth. The market will always be bigger than you. The moment you forget that, it humbles you. Not out of cruelty, but out of math. Price doesn't move to teach lessons, it moves to express order flow. If you ignore that because your ego needs to be right, you become predictable, and predictable traders lose. So how do you actually remove ego from your trading? The first step is separating your identity from your trades. You are not your last win. You are not your last loss. A losing trade does not mean you're a bad trader. A winning trade does not mean you're a genius. When you internalize this, exits become easier, losses become cleaner, decisions become calmer. You need to start judging yourself by execution, not outcome. Ask yourself after every trade, did I follow my rules? If the answer is yes, the trade was successful, even if it lost money. If the answer is no, the trade was a failure, even if it made money. This single shift weakens ego more than any motivational quote ever could. The second step is defining invalidation clearly before you enter a trade. Ego thrives in ambiguity. If you don't know exactly what proves you wrong, you'll argue with price when it happens. Professionals don't enter trades hoping they work. They enter trades knowing exactly what would make them exit. When that condition appears, they don't hesitate because the decision was already made. Think about this example. You enter a trade because price is holding above a key level. The moment price closes below that level and fails to reclaim, the trade is invalid. Ego says, give it time. Discipline says, I'm out. Only one of those protects your account. The third step is fixing your risk so ego doesn't get activated. If you're risking too much, every tick feels personal. You'll defend bad trades because the loss feels threatening. When risk is appropriate, you don't need to defend anything. you can exit calmly. Ego loses power when losses are tolerable. You should be able to take 10 losses in a row without emotional damage. If you can't, your ego is being forced to protect you from fear. Reduce size until you can trade neutrally. Neutrality is where discipline lives. Drop a comment if you've ever held a losing trade just because you didn't want to admit you were wrong. Naming the behavior is how it starts losing control over you. The fourth step is removing prediction from your language. Stop saying, "This will go up." Start saying, "If this happens, I'll do this." Language shapes behavior. Predictive language feeds ego because it implies certainty. Conditional language keeps you flexible. Flexible traders survive. Rigid traders break. The fifth step is slowing down after wins and losses. Ego spikes after both. After a loss, ego wants revenge. After a win, ego wants expansion. The most dangerous trades you'll ever take are the ones immediately after strong emotion. Professionals know this, so they pause, they review, they reset. That pause saves more money than any indicator ever could. Another powerful tool is asking one brutal question before managing a trade. If I were flat right now, would I enter this trade? If the answer is no, you're only staying because your ego doesn't want to exit. That question cuts through denial instantly. Over time, something changes when you apply these steps. You stop fighting the market. You stop arguing with price. Losses don't spiral. Winning streaks don't inflate you. Your equity curve smooths out, not because you're smarter, but because you're humbler. Here's the irony most traders miss. Humility is not weakness in trading, it's strength. Humility allows you to adapt. Ego forces you to defend. The market punishes defense and rewards adaptation. If this video is helping you see your trading differently, like it, subscribe, and share it. This channel exists to fix behavior, not sell fantasies. You don't need to kill your ego. You need to stop letting it make decisions. Ego can exist, it just can't trade for you. Rules trade, risk management trades, process trades. If you've made it to the end, you're already ahead of most traders because you're willing to look inward instead of blaming the market. Like the video, subscribe to the channel, comment which ego habit you're committing to fix first, and share this with someone who keeps saying, "I know better," right before losing money. Your ego is costing you money in Forex. The moment you stop trying to prove yourself to the market finally gives you room to succeed.